Today, Bitcoin hovers at the $97,000 level to close out the week. Do Kwon reportedly pleads not guilty in U.S. federal court. And Brian Dobson of Clear Street shares what could drive gains for publicly traded Bitcoin miners in 2025. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Crypto markets are in the green as the first week of 2025 comes to a close. As of noon Eastern, Bitcoin inched higher but remained at the $97,000 mark. Ether climbed 3% and Solana rose 5%. Crypto markets have been outperforming broader equities in the first few days of 2025. The S&P 500 index has gained less than 1%, while Bitcoin gained more than 4%. Altcoins have made even bigger gains, with Ether up more than 7%, Solana and XRP jumped more than 12% and 17% respectively, all as of noon Eastern. Okay, let's talk about the top stories. Do Kwon reportedly pleaded not guilty to fraud and conspiracy charges tied to the $40 billion collapse of Terra Luna. Reuters reports the former Terraform Lab CEO was in federal court on Thursday when prosecutors unsealed a 79-page indictment against him. Do Kwon's company was behind the failed Terra USD stablecoin, which was supposed to maintain a $1 value using an algorithm. The DOJ alleges Kwon misled investors when he told them the algorithm had restored the stablecoin's $1 value during a depegging event in 2021, when UST fell to 92 cents. In reality, prosecutors say Do Kwon reached an agreement with a trading firm to purchase large amounts of the token to restore its $1 peg. He faces 9 charges, including securities, commodities, and wire fraud, and money laundering conspiracy. His extradition this week ends a months-long battle between the U.S. and South Korea to extradite him from his detention center in Montenegro. All right, let's talk about Bitcoin mining for our main story. Fintech firm Clear Street out with new research this morning, breaking down the outlook for publicly traded Bitcoin miners in 2025. Crypto World's Jordan Smith spoke with Brian Dobson, senior research analyst and managing director at Clear Street, to find out how miners could build out AI infrastructure and leverage their Bitcoin holdings to drive big gains this year.
All right, Brian, Happy New Year. Thank you so much for being here. You're out with a new note on the outlook for Bitcoin miners in 2025, and it seems like after a struggle for some in 2024, things might be looking up for some of the publicly traded miners. Walk me through what you found in your note.
Yeah, absolutely. And thanks for having me. I agree with you that 2025 is probably going to be a significantly better year for the miners than 2024. And I see 3 key themes emerging, right? So the first is that Bitcoin miners with HODL balances will begin to generate yield on those HODL balances. The second is that there are favorable political tailwinds coming out of the new administration in Washington. And the third is that companies with exposure to high-performance compute will continue to accelerate that migration toward high-performance compute data centers, offering strong revenue growth, high multiples, and better margins for many of the miners.
Yeah, let's start with that high performance compute, if we can go sort of out of order there.
Absolutely.
It was a real driver for a lot of the stocks you point to, like Bit Digital and TeraWulf as examples. We also paid attention on the show to Core Scientific and its partnership with CoreWeave. Many of those miners that use HPC in their business models outperformed pure play miners in 2024 by a pretty wide margin. Should we expect that margin to grow or shrink in 2025? What is your expectation there?
Yeah, I would expect that margin to grow, to expand in 2025, because what you're going to see is a proof of concept developing into a real business for many of these miners. Recently, in December, Bit Digital and TeraWulf both signed new HPC contracts, adding significant megawatts to their platforms, showing that they are viable operators of Tier 3 data centers. And that level of performance is going to lead to multiple expansion across the space. I mean, you may see some of these Bitcoin miners dabbling in HPC, trading at relative premiums to the mining space, but they're still trading at significant discounts to pure play data center companies with Tier 3 exposure.
Yeah, you do call out some pure play miners in this note, specifically CleanSpark and Bitfarms, as best in class pure play miners. What makes you so bullish on those, and how do pure play miners compete in this world of growing AI demand and shrinking revenue from mining rewards?
Yeah, that's a great question. So CleanSpark is my top pick for the pure play miners, and they differentiate themselves by their top flight management generating excellent returns on their mining portfolio, right? They are consistently able to increase efficiency and run the fleet at optimum levels, right? And that's their key differentiator. And they can do that because they're fully vertically integrated. I think that in some part, miners that are not quite as adept at reaping coin out of their portfolio will need to pivot to other business models such as high performance compute. But if you're an excellent miner and you want to stay there and you're exploring new opportunities for your HODL portfolio, then I think that mining coin will be very profitable throughout 2025, particularly at these price levels, given that, the global hash rate has been slow to adjust to a significantly higher coin.
Yeah. I want to go to another point you made in this note, and it's this idea of securities lending through prime broker partners. Talk about, for people who are unfamiliar, how this would work and involve the Bitcoin ETFs that came out around this time last year.
Yeah, we're very excited about that. So this is still very much in its early days. And there are a few Bitcoin miners that have publicly spoken about generating yields on their HODL balances, but they've given very few details about this. So we did a lot of work over the past few weeks finding out kind of what this would look like. And we think the most likely outcome is via securities lending. And the way this would work, and it does require a rule change from the SEC, but the way that this would work is Bitcoin miners would deliver coin to Bitcoin ETFs who would give them in kind for that coin shares in the ETFs. Then these miners would partner with a prime broker and participate in the stock lending income from those equities, right? So it's the same thing as traditional securities lending, as if someone were going to short shares of IBM or anything else. But now they can do this with a Bitcoin ETF. We think there's demand for that, and there will probably be a low single-digit yield as a result.
One big contingent you mentioned there is regulatory approval through the SEC. Obviously, there's changing leadership happening across Washington, and I'm not going to make you comment necessarily on where you think that's going in general, but I do want to know how much potential exposure or risk Bitcoin miners have to the regulatory environment right now, because there are areas of crypto that do have more exposure, that are paying more close attention to what's happening in Washington. But where do the miners fall in that sort of conversation?
Well, for the miners, this rule about in-kind exchange is very important for generating yield on the HODL balance, right? So roughly, call it over 90% of ETFs can participate in this kind of in-kind exchange via the delivery of traditional underlying equities, right? But the way that the Bitcoin ETFs were approved last January precluded this. So it's not an earth-shattering change, and we think that the new administration, who has publicly stated that it's far more friendly to crypto than the outgoing administration, will take this step to change the regulation at the SEC, right? So that's important for Bitcoin miners. And then the general sense that Bitcoin will be an important part of the economy for the next 50 years and beyond from this administration should be a positive for crypto-related businesses.
We've talked about miners this whole time, but I feel like have to talk about Bitcoin too, the thing that they also care about. It feels like there are more catalysts for Bitcoin than there have been in a very long time, but I also think that comes with a lot of variability and uncertainty. We just don't know what's going to happen with regulation. We don't know what's going to happen with Wall Street adoption. There are just, lots and lots of questions right now. But generally, if I can get your outlook for Bitcoin in 2025, is it just, straight up from here, given the rally that we saw at the end of 2024? What's your expectation this year?
Yeah, so we try not to put specific price targets on Bitcoin, but my viewpoint is bullish. Certainly, things rarely move in a straight line forever up and to the right, but I think that the overall trend is up and to the right. I think that there's a real use case for Bitcoin. I think that there's a much faster adoption pace through 2025 and 2026. I think there are some key catalysts here, like regular retail investors, everyday mom and pop type of investors having access to the coin via these ETFs. High quality companies putting some of their balance sheet into Bitcoin and generating yield. I think that if there's a use case for generating yield on the portfolio, it makes it easier for corporations also to own Bitcoin and try to generate yield in that manner. So I remain positive on Bitcoin pricing through 2025 and beyond.
Okay, that's all for Crypto World this week. We're back again on Monday. We'll see you then.